In just a few months since Donald Trump took office, the foundations of American financial dominance, which have been in place for over a century, have never been shakier. After a devastating trade war, Trump's increased attacks on the Federal Reserve have weighed heavily on U.S. assets. Investors are re-evaluating the assets essential to the U.S. economy's dominance. In this uncertain economic climate, safe havens like the dollar and Treasury bonds, well, these safe havens are suddenly becoming less attractive. The so-called Trump trade that was supposed to boost U.S. exceptionalism, well, it is fast turning into a sell America trade. Trump's economic broadsides are pushing investors to embrace emerging market assets. Emerging market stocks have outperformed U.S. shares for the first time in 16 years, despite a worsening sell-off in the S&P 500. The MSCI Emerging Markets Index has recovered over 8% from its April lows. The 14% excess return for emerging market equities compared to Wall Street stocks this year marks the most significant outperformance since 2009. Salim Ramji, CEO of Vanguard, continues to have faith in the fundamental strength of the American economy. When asked if U.S. exceptionalism has peaked, he said absolutely not. However, there is growing consensus that the decades-long United States investment dominance is coming to an end. Alan Bokobza, head of asset allocation, had warned in September and again in February that U.S. assets might be weak. On Tuesday, he said that if Trump continues with a multi-front trade war, the rotation out of U.S. assets could continue for years.